Want to double your money in just 5 years? In this video, I'm sharing my top 5 favorite Vanguard index funds that are perfect for long-term buy and hold strategy. Warren Buffett, the legend himself, advocates for holding on to winning investments, as a few top performers drive most market gains. But instead of trying to pick individual stocks, why not follow Vanguard founder John Bogle's advice and buy the entire haystack? These high-yield, low-cost, diversified funds offer broad market exposure and the potential for steady growth. I'll break down key factors like dividend yield, expense ratio, and risk level to help you make smart investment choices. So let's get started. The Vanguard Balanced Index Fund Admiral Shares (VBIAX) is an excellent choice if you are a buy and hold investor looking for a cheap index fund. With an expense ratio of just 0.07%, it offers a 2.1% dividend yield with an ex-dividend date of September 26. VBIAX has a moderate risk level. The fund uses a 60-40 strategy, 60% in stocks, tracking the CRSP US Total Market Index, and 40% in bonds, benchmarked to the Bloomberg US Aggregate Float Adjusted Index. Except for rare instances like 2022, when both stocks and bonds declined, this Vanguard Index Fund has consistently delivered solid returns, averaging 8.5% annually over the past 10 years. Its low expense ratio is well below the 0.82% average of similar balanced funds. For buy and hold investors who find VBIAX too conservative, Vanguard's 500 Index Fund Admiral Shares (VFIAX) may be more appealing. This fund tracks the S&P 500 and is a 100% equity fund with no bonds, making it ideal for those with a long-term outlook and a high risk tolerance. VFIAX is also tax efficient. It has a low 2.2% portfolio turnover rate and minimal capital gains distributions. On top of this, it's affordable with a 0.04% expense ratio. The fund has a 1.24% dividend yield and an ex-dividend date of September 27. VFIAX has an average to moderate risk level, but requires a minimum $3,000 initial investment. The next fund, Vanguard Total Stock Market Index Fund Admiral Shares (VTSAX). This index fund tracks the CRSP US Total Market Index, offering broad exposure to the entire US stock market. It covers all 11 sectors and includes small, mid, and large cap stocks, weighted by market capitalization. With a passive strategy, VTSAX maintains a low turnover rate of just 2.2%. The fund is well diversified with over 3,600 stocks, but it leans heavily toward large cap stocks with a median market cap of $179 billion. This makes its top holdings similar to those of VFIAX, and their returns are nearly identical. This fund has a low 0.04% expense ratio and a 1.35% dividend yield that is paid quarterly. It has an above average to aggressive risk level. A portfolio combining Vanguard Total Market Index Fund (VTSAX) and Vanguard Total International Stock Index Fund (VTIAX) offers broad diversification across the US, developed, and emerging markets. However, if you decide to take this route, you must decide how to allocate between the two funds and when to rebalance. As a buy and hold investor, you can avoid all this hassle by replacing both funds with a global equity fund like Vanguard Total World Stock Index Fund (VTWAX). This fund tracks the FTSE Global All Cap Index. It offers market cap weighted exposure to over 9,900 global stocks and comes with a low 4.3% turnover rate. It's also economical with a 0.1% expense ratio and a 1.93% dividend yield that is paid quarterly. VTWAX has an average risk level and requires a $3,000 minimum investment. And finally, Vanguard Target Retirement 2060 Fund (VTTSX). Vanguard Target Retirement Funds offer a simple, all-in-one solution for investors seeking a globally diversified portfolio that adjusts its exposure automatically over time. You simply pick the target date closest to your planned retirement, and the fund will automatically allocate your investments to a low-cost mix of stocks and bonds. As you get closer to retirement, the fund gradually becomes more conservative. Unlike static funds like VWELX and VBIAX, which maintain a fixed asset allocation, a target date fund like VTTSX adjusts dynamically. Over time, this fund gradually shifts towards bonds for greater income and capital preservation. By 2060, the fund will focus on income over growth. VTTSX has a 0.08% expense ratio and a 1.85% dividend yield that is paid quarterly. The fund has a low risk profile. If you like this video, you will also like this one on 3 AI stocks set to mint new millionaires. Be sure to like, share, and subscribe to Financially Well. Let me know your thoughts in the comments below. And as always, stay financially savvy. See you in the next video.